Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Rick Pannu, co-founder and CEO at Trajan. Rick, thank you for joining me today. How's it going?
Very well. Thank you, Tony. Thank you for having us. I really appreciate your time.
Awesome. And if I'm not mistaken, this is your first podcast. So I am excited that the first of many, hopefully. And we have many first timers on the show. So yeah, very excited to have you on. On LinkedIn, it looks like you are based in LA. And we are recording on April 8th. So LA in April, I'm guessing just thoroughly beautiful weather. Uh,
Absolutely, Bruce.
Fantastic. And I hope that you were not affected by the LA fires of late last year.
No, fortunately not.
Good,
Yeah, really,
good.
quite bad for quite a few here, but no, we were okay. Thank you.
Fantastic. So we always give the guest a chance to give the elevator pitch. What is Trajan?
Um, so what we do is profile risk. Funny enough, uh,
Hold on. Okay. So this is Profiles in Risk. And
yeah,
after 600 and some episodes, almost 700, finally found the company who describes themselves as what we do is we profile risk. Fantastic. You're in the right place. It's in it's in the name. Okay, so you guys profile risk, huh?
yeah, we that is what we do. Specifically, PNC, the go-to-market is around construction,
Okay.
construction risk. So, profile risk for contractors, for
Okay,
workers'
perfect.
compensation,
hmm
general liability, builders risk. We can do RAPs and OSIPs. We are really good at well profiling risk in the
Fantastic.
construction space. Uh, so that's what we're
All right.
do.
So so the clients that use you guys, who you design the product for within PNC, is it basically agents and MGAs that do a lot of construction and carriers that do a lot of construction?
Yeah, so we're building AI agents specifically for underwriting and for auditing
Okay,
of construction risk
perfect. So AI
on
agents.
the casualty side.
Okay, so AI agents for underwriting of construction risk.
Yep.
Fantastic. All right. So my world is very interesting in the podcast. I record almost every day, and there was a time where almost every conversation was about blockchain. And the right and we've had waves of different technologies. For the last year, all I hear about is AI. Uh,
Yeah.
and for the last maybe 6 months, I've had two or three recordings with people who are doing AI agents, right? So it's important to specify. So we don't mean insurance agents. We mean a discrete AI algorithm, software, app, whatever, that can behave in such a way that it helps us underwrite construction risk. Am I about
Mhm.
okay? Perfect. I'm a former middle market underwriter. I never did construction. Okay, but I definitely intimately familiar with what underwriters do. Okay, so I would love to hear a little bit about what the world of construction underwriters is today without this technology and how Trajan makes it better.
Okay. So yeah, you're spot on agent. It's an agent. Agent describes the framework. So what makes it agentic is the framework of and I guess the other thing that would make it agentic would be the ability to take forward action.
Perfect.
So what you could do is you can have based on certain decisions, certain outputs, and certain inputs given that gives you certain outputs that would facilitate the next step to actually move the ball forward. So today, when an underwriter is trying to classify what um, what a risk is for a contractor, they're going to rely on an application. Well, okay, so if I just kind of back up and kind of break down how, I guess, how we got here. So what's crazy to us is that there's a few things that are kind of interesting about the space and predictive analytics and what we're doing today in insurance, what an underwriter is able to do, I suppose. So today we're not really using insurance applications in construction to forecast losses or risk. When you actually look at like insurance filings for, Travelers predictive model, and you go on surf and you pull what their inputs are, um, there, there's almost nothing from an application, which I thought was really interesting. If anything, it's all from the loss side. So the first thing, and then looking into like what drives that, why is that the case? We did hundreds of hours of interviews with underwriters in this space, and from architect and engineering and construction and adjacent spaces. And what we learned was that they don't actually trust the application per se, all the data fields on it. It's not like somebody did something wrong, but they don't trust it enough to actually use it as inputs for predictive analytics. And then when you do use like digital footprint predictive analytics, it's all based on probability, kind of guessing. Our AI framework is focused on deterministic answers to application questions and underwriting guideline questions. So we go and we take ACORD, like the ACORD 186, which is the contractor supplement, and ACORD 125, 126. We did an exercise where we took ICQ's instant underwriting, instant quote engine. We took Byberg's underwriting guidelines, and we made an index of all the questions that come on these different underwriting procedures. And then we map those questions to where we can find an attestation grade answer. So how can I know 100% yes or no, or percentage wise, how much work this person does that's repair or new construction, if they do track homes, if they're building stuff that goes over 36 feet. So mapping it to hard answers that actually get the application to a point that you can really trust it, and going forward, hopefully facilitate better AI across the entire system as applications improve. So one of the first things that our platform does today versus when you have our platform is tries to bring the application and the instant quoting to a level where you can actually trust it and use it as inputs for training. They have the whole concept garbage in, garbage out. So how do you make that attestation grade, audit ready with decision traceability? And so we really focus on delivering that as a deliverable. And then the second part of that is maintaining those data pipelines, whether they be API or however you want that data served up, so that you can actually monitor the risk over the life of the policy and see if there's any changes. Because one thing that's different about construction to if you were to take something like, I don't know, consulting or running a printing press business or something, the nature of construction changes. The nature of risk changes. Contractors grow, they shrink, their scope of work changes, they take on different kinds of projects, they do a lot of subcontracting. So we've built a lot of tools to essentially monitor and track that risk across the life cycle. And then the next phase of what the platform does is actually quantifies the premium depending on the level of integration that the customer will allow and that the carrier desires, the MGA desires. What we can do is actually keep up with those premium calculations on a daily, weekly, monthly basis. How we think that
Okay,
served up.
hold on. So that part you kind of lost me. Okay, so totally get it up to here. So basically, underwrite it better, verify the information that we're very given to make sure that it is true, which is hard in the construction space, and making it true or very having an attestation that information is correct, both allows us to much better predict losses, and also to better train the AI going forward with good data, not with crappy data. But the pricing piece, uh, pricing daily, you lost me with that piece.
Oh, okay. So right now, to back up, so on with respect to how AI is being trained today, so one thing we can help carriers and MGAs with that are building their AI, we can give them better inputs so that they can actually count on training from the application, not just from the losses.
Okay.
So we can actually verify and give you hard answers to eligibility questions, which, for example, in the construction industry, a couple of eligibility questions that are yes, no, depending on the carrier, uh, would be like, does the risk do track homes? Do they work on stuff over 36 feet or over 24 feet?
Mhm.
These are cutoffs. Do they do new construction? Do they work on condos? So these are things that we can answer across contractors and validate to help you actually train your model based on the application. So we can actually help you correct the applications and inputs that you have now. And the other thing we can do in order to compete for business, there's carriers that have told us that they keep reducing the amount of questions that they're actually requiring because it begins to feel like an interrogation, and then the brokers aren't coming and getting quotes. So
Of course.
with our technology, these don't have to be a decision between. You can have less questions that the broker goes through, and we can fill in the blanks for a bunch
Perfect.
of the other questions
Yes.
commonly across all the risks. Then on the pricing side, so the way that premium is calculated for workers' compensation and general liability. So what you're doing is you're taking a class code, which is often wrong in construction for a couple of reasons. One big reason is because there's so many different class codes, and it's constantly changing with construction companies.
Okay.
So how you get to a premium is you take in general liability, you take gross sales, and you'd say like you take your GL class code, and let's say you're a general contractor, and the weighted price for let's say for carpentry is 50 basis points on gross sales, and you also you do a little bit of roofing, and maybe that's 75 basis points on sales. You pour a little bit of foundation, maybe that's 65 basis points, excuse me, 50 basis points, 75 basis points, 60
Yeah.
basis points. So what you do is you would take the amount of gross revenue in that class code, and you would multiply it by those basis points to arrive at what the premium would be. And that would be GL. On workers' compensation, what you do is you would do it based on their NCCI, or if you're in California, or there's certain states that have their own class code system for workers' compensation, which is slightly adjusted off of NCCI. You would take your payroll dollars, and you would take how many hours of payroll you were paying your employees. In California, even more complicated because it's a dual wage state. So depending on how much you pay the contractor, and given the class code, and then given the territory, you would do a weighted cost. So roofing might be, it gets pretty high. It could be as high as 65 percent of your payroll, not basis points, percent. So it gets significantly higher
Wow.
on.
But it makes sense. It like falling off a roof, right?
Right,
The risk
right.
thing, probably.
And there's a lot of volatility between carriers
Mhm.
in California, whereas like Florida, it's the same across all of them. But you still have to take that weighted average of how many
Mhm.
hours. So, how many hours did my team spend on roofing today, multiplied by the payroll that I paid them, multiplied by this rate, is going to give me that premium. And so today you get this estimate up front, when you go through the process, the application process with a broker, and they're going to give you an estimated premium, and you're going to pay usually broken up. It might be in 10 payments or quarterly payments
Okay.
or semi-annual. And then after the policy period's over, you're going to have an audit. Sometimes there will be an audit in the middle, but often it's not until after the premium period is over. So the insurance company has taken the risk. They have taken the premiums, hopefully invested them and turned a profit, and hopefully there's no losses. And then after the period's over, you're going to audit what the actual composition of risk was, and you're either going to give them a rebate or you're going to give them a true up billing. So what our technology allows is for you to keep up with that. You could keep up with it on an hourly basis if you wanted to,
Crazy.
and you could have 100% accuracy of premium, every minute of the day.
That is crazy. All right. Awesome. So yeah, as a former underwriter, even though I don't come from the construction side, as a former underwriter, yeah, I intuitively makes it intuitively makes sense to me. Absolutely. What is the integration like? Like, do we have to completely move off of our current underwriting system, or does it plug into my guide wire or whatever system I use? Like, what is the integration like?
Yeah, so fortunately, our engineers are awesome. I got kicked out because I couldn't keep up with the engineering team. That's true. Mohsen and Sarin are also they're really brilliant engineers who are really strong with their capability on API integrations and making sure that it is smooth and seamless in whatever flavor you'd want. Our back end is Python and R, but you don't necessarily need to ever know that. We can give it to you in a CSV or an API. We can update your React interface, however you would want that on the front end, or we could just fill out the ACORD forms and give them to you. Or
Okay,
if it was a
I do
PDF.
have to say, any client and any carrier who brings you in and like you do a POC and they get to the point that they want to implement, and when you have the conversation, how do you want to plug my system to your system, and they say, can you print to an ACORD PDF? Just walk away. Just walk away. Well, sorry. I just had to say that. All right. Very cool. What is the pricing like? And I do, if I understand correctly from our pre-conversation, this is still fairly early, so the pricing is not like super set in stone. But what is the pricing philosophy?
We kind of like the concept of what can I get for $1 these days, and what about certainty?
Love it.
And that's what we're thinking. So today, to give you an idea of what an application based on like looking at a pilot right now. So you might have Hazard Hub or Verisk. You put in an address, and they're going to update the distance from a fire hydrant. They're gonna update. You're just gonna have the auto populate, right? Distance from a fire hydrant, and give me a classification for the fire risk. We might do the same exact thing for license verification. How long has the contractor been in business? What's their largest project value? Are they qualified? And you actually want a quantified number. What's their largest project value, or does this exceed their largest project value historically? Yes or no. Those would be, so you just update into the portal would be the most typical, just the same way that you would with fire hydrant is greater than 2,500 feet or less than 500 feet. We could tell you, we would just fill that blank right in.
Okay. Perfect. Where did the idea come from? I'm always curious about the origin story. How did Trajan come to exist?
Um, yeah, it was somebody recently said it's a bit of a wandering story. Okay, so originally I was an auditor, an accountant out of school,
So you were a
and
premium auditor.
no, Sarbanes-Oxley, internal audit, external audit
Perfect.
for public companies,
Excellent.
principally manufacturing oil and gas. I came out of school right after Enron. I was really fortunate to work on some oil and gas clients that allowed me to travel the world and work on Sarbanes-Oxley and business processes, COSO, some of the early uh, CISA frameworks, so like the computer information systems auditing frameworks in a manufacturing for manufacturing clients. And I did pretty well in the stock market when the market crashed in 2007. And I took that money and my brother and I got into rental houses. That was got out in like 2011, 12. And then I was fortunate to work for some family offices where some people that were some accomplished professionals that were very generous with their time and energy and really helped me learn how to become a commercial real estate developer, I suppose. So then took those rental houses and got into commercial development, multifamily, small neighborhood commercial plays. And the approach that we would take is like we're really data driven. So we would look at federal spending, state spending, municipal bonds, across a bunch of different markets. We would pull all the property data, tax assessor data. We're looking for delta to see if you're seeing a shift at the census block level in ownership by human beings versus entities that end in LLC or trust or corp or LLP. You're looking for spending on schools, stuff like that, on the municipal bond side, streets, drainage, sidewalks. And that's how we would kind of target different cities. Then we would pull all the sales data and the rental data and try to find like a price to earnings where you have these inflationary drivers. Um, that worked pretty well and allowed us to go to San Antonio, St. Louis, did some stuff in London, Virginia, and LA. And as I was going to these markets, then the question became, and as the projects got bigger, how do I find a contractor, right? Somebody to trust because my brother's awesome. He's really good at staying on top of everything. And if it's these smaller projects, he can do that. But if it's a new construction project, you have to turn the keys over to a general contractor, to your subcontractors, and just trust that 18 months from now this new building is going to be there and there's not going to be any
On
hiccups.
time and on
Uh,
budget, of course.
yeah, right. And that was a big, scary, hairy kind of monster for us. So
Yeah.
not being able to just control the ball and fill the gaps. So we started looking for. Actually, I was on a flight to London working for a family office on a project out there, and I came across a PwC report on data-driven cities that were empowering developers with data, and LA was at the top of the list. And in that, they also had a couple of other things that were in their favor with opportunity zones and transit-oriented corridors coming together to create certain census block pockets that were going to disproportionately outperform if you could figure out who to actually get to build it for you. So we started looking at how do we take this data and actually model it to identify which contractors we should trust to deliver a brand new apartment building for some young guys from out of town. Who do they think they are? Kind of insecure about, right? Don't want to get taken advantage of, and how do we know who to trust? Not because they would do it. It's really about contractors are often like it's one of the most honest trades out there. The challenge is not that somebody does it on purpose; it's that you grow too fast. So really what we're looking at is which are the contractor, at what capacity can we count on this contractor to finish? on time is actually the question. So it's really, given the current backlog, so what we would have to do is we'd have to figure out not only what have they done in the past, what are they going to be doing? So we could actually see, will our project fit into your pipeline without seeing delays?
Mhm.
And we developed a model to do that. And we found some really deeply discounted parcels for new builds because certain regulations weren't priced in yet. Just certain regulatory changes gave for some pricing anomalies that allowed for disproportionate returns that you hadn't seen in LA
So
in decades.
hold on. You were basically playing Moneyball
Yes,
with commercial real estate.
yes, yeah, yeah,
Fantastic. Okay, continue.
yeah. And so we thought, we can do one, maybe two. What if we talk to some PE firms and line up a portfolio of these, because it is like Moneyball, you have a lineup of them, and then something's going to screw up. This will absorb the screw up, is what we thought. If you do enough of them, right, and maybe pool it and come out with a commercial mortgage backed security kind of pooling effect. Anyway, so we showed it to some PEs, and the third one we talked to, I was convinced, I was naive enough to believe that I could build software. And the feedback was, "This is amazing. We'd love to give you $40 million to build apartments, but what about building this as a software solution for the insurance industry, and then you wouldn't need PE. You'd have plenty of funds, and you could build the real estate to your heart's content." Me and my brother, we enjoy the process of building, and anyway, um, and I thought, my mom built software. How hard can it be? And my mom was brilliant, and I was wrong. My mom's worked for NASA and for the Department of Defense, Shell. She builds enterprise systems, for Fortune 50 companies, and she's really good at it. And so I was convinced that I could build software. I spent about a year and a half messing around, really trying to build this into an enterprise grade solution. At the time, it was really like VBA, DAX, Power BI, Microsoft Excel, driven. And basically, after about a year and a half, she came in one day and she's like, "Well, let me actually see it. Let me, like, what are you doing? Why is it a year and a half? Nothing's been built. You're just, I don't understand. You're just holed up in this garage." Work out of a garage in LA. It's actually a late, it's like an Italian restoration shop for like 1960s, 70s Italian and German race cars. Anyway, so you're just like holed up in Giovanni's shop, building this, like, what is supposed to be software. I haven't seen anything. Nothing's getting built. What's going on here? So when I show it to her, she's like, "No, that's terrible. That's awful. That's not enterprise software." And to which I responded, "I can fix it." And to which she responded, "Obviously not." Um, and but she was very generous with helping me find resources that really could throw away everything that I had done and just throw it out the window, start from scratch to build an enterprise solution. And so that's where Trajan eventually came from, was
Fantastic.
where we brought on the Mosa and my co-founder, Mosa Mandani, Sharon Ram, our principal engineer, Asif Mohammed, our civil engineer, data mapper, and now Bernie Stadelman, who has 4 decades of experience working in insurance from FM Global, AmTrust, and Liberty.
Beautiful.
And really a team effort. Mohsen and Sarin and Asif have built the back end, the platform that allows us to do anything that is AI, that allows us to be an enterprise grade solution, and ready to serve.
Fantastic. What a great story. Thank you for sharing. I always love origin stories. Looking at the website, Trajan AI, the system looks beautiful. So clearly it's come a long way from when you built it. And I've never been a founder, but what I hear is that uh, if if it's not held up to if the first version, not 1.0, but the version 0.1 alpha version is not held up with duct tapes and dreams, then you're overspending. So I think that you did it right, and it looks like it's in the right place now. Um, and so now, basically, if I'm not mistaken, correct me if I'm wrong, you're basically at the point where you're starting to bring in POCs. You started to starting the process of doing proof of concept for a couple of carriers.
Yeah,
Man,
yeah. So
I
that's what
I
we're.
I love getting insurtechs on the podcast fairly early. So this is really cool. Uh, so Rick, thank you so much for coming on the show today. Look forward to have you back in a year or two. Hopefully at that point you're like in full on deployment with some carriers, and we can talk about how that's gone and how the product has changed. But yeah, as a former underwriter, this intuitively logical to me why this is a much better way to underwrite construction. Um, and part of me is surprised uh, that this didn't exist. Part of me is not surprised because insurance is insurance, and the more specialized the area of insurance, the less technology they have, the more it's done on the back of a napkin. Uh, it's just the way things are. And yeah, construction is a huge piece of the risk that our industry insures, and a really tricky line of business. So uh, sounds to me like this is a really fantastic tool that you're developing.
Thank you, Tony. Appreciate it.
My pleasure.